Oh hey, my name is Brad and welcome to the WyseFx YouTube channel. The channel itself has been on a probably 4-year hiatus at this point. I created this YouTube channel back 4 years ago to share my trading journey and to help those along the way that are either new to the trading world or potentially struggling in their trading or just want to see the lens through another day trader. I was posting frequently and then life got in the way. I welcomed a daughter and a son into the world, and to be honest, life just kind of got in the way. But if we fast forward 4 years, 2 kids later, I'm now trading full time and I am a co-founder of the Phantom Trading community. It's a coaching community to teach you supply and demand trading, give you support and guide traders who want to become consistently profitable in the markets. But this YouTube channel isn't going to be specifically about Phantom. There will be little snippets from the things we do in Phantom, but by no means is this a portal to sell you on Phantom or anything like that. If anything, what this project is me becoming a little bit more comfortable behind the camera. I've never done anything like this. This is very new to me. I'm going to struggle with things as I go. It's one of those things where your first video, your first podcast is probably going to suck and you have to be okay with that. And here I am putting myself out there once more, kind of going more of a different approach. I'd like to say that I'm approaching it more of a vlog / trading content. I'm going to talk about things like mindset, routines, discipline, my day-to-day life. I might throw some video games and stuff in there, just kind of make it my own passion project to kind of put myself in an uncomfortable situation and, showcase my life. I've been fortunate enough to be trading full time for well over 4 years now. And I find myself with a little bit more free time. I'll air quotes that free time. I'm always constantly busy being a dad, running a trading community, all those sorts of things. But at the end of the day, I think this is just a fun project to, one, take me a next step in my journey, getting more comfortable being more of a public face, so to speak. Not that I'm trying to be an influencer or anything like that. I'm just a dad, a guy, a trader, a person who likes to be on the charts, who likes to trade, who likes to play video games, love coffee, all those sorts of things. And I want to just kind of put that out there, and to those who want to tag along and enjoy with me, thank you. If not, that's totally fine too. I'm gonna make mistakes along the way. This is gonna be a learning experience for me, just being behind the camera, getting angles right. My office is pretty messy. Most people be like, no, your office is pretty immaculate, comparatively speaking. So it's one of those things, right? We're always our biggest critique. But I do want to make one shout out to someone who inspired me to actually do this. Albert Burgess, a good friend of mine. He has a YouTube channel if you haven't checked it out. I'm sure you have, but I'll link it in the description. Watching his videos for the past several months, I've always resonated with the style that he has, kind of that little bit of a vloggy style, some charts, and just kind of keeping it super casual, keeping it super off the cuff, that sort of stuff. Really resonated with me and kind of inspired me to start this project, so to speak. So we'll see where we take it, but definitely wanted to shout him out because he was definitely a big inspiration to getting me to do this. So without further ado, we're gonna jump into basically day by day of my life. This is something that's a little bit uncomfortable for me. I've never done anything quite like this. I'm very much an introvert. I like to stay within the shadows, so to speak, do my own thing. So this is me kind of trying to push myself into something maybe a little bit more interesting, more challenging, that sort of stuff. So bear with me if I talk about the same things or find a kind of fumble with my words or try to figure out what it is I want to say. I'm used to talking with a microphone. I don't even know if you can see that. Maybe, yeah, you can. I'm used to talking behind a microphone to the charts. Definitely not a camera, seeing myself on the little screen on the camera. It's a little jarring, but that's okay. I'm gonna learn, I'm gonna grow. We're gonna have some fun along the way, hopefully. And yeah, thanks for tuning in, and let's get to it. Welcome to WyseFx. Happy Tuesday. Just finished recording my morning outlook for the Phantom community, really focusing on euro dollar. It's the pair I've been primarily focusing on, but in the outlook, just really focusing on the monthly, the weekly, and the daily candles so that we can understand and have a better idea of how to use those different time frames to find higher probability trade ideas in terms of direction. because, what we know or what we found is that most people struggle with finding trade directions. Everyone knows their entry models, they know how to enter trades, but more often than not, it's finding the direction of the market and actually trading with the direction of the market that tends to get people caught up. And it can be difficult. You think the market's going to go one way based on a lot of technical confluences, but fundamentals and maybe just momentum have other ideas. So being able to really hone in on what's happening on the bigger time frames, the monthly, the weekly, and the daily, how those all kind of fit together to build your overall direction, play an important part. So really took some time to dive into that. But for the rest of the day, I'm going to be doing some testing, some trading, all that sort of things. Well, I'll be only trading if a setup presents itself, but definitely be looking at doing some back testing on the charts, just testing some things. Part of being a trader is just refining the edge, sharpening the sword, so to speak. You see professional athletes, they're in the gym, they're constantly improving, they're constantly working on themselves to be better athletes, to perform better, to do better. So it's no different with trading. You should be testing, you should be refining, you should be studying, you should be learning new things. It's always about keeping things simple. Clarity is key. The less moving parts you have in your trading strategy, the easier it's going to be able to look at a chart, know what direction the market is likely headed in and why, and what you would be looking to do when price gets there. The less kind of variables you have at play, the easier trading really can be. Now, the caveat of that is, while it is easier, you also need to do thorough testing and understand why things work or why your edge works in that sort of environment. So yes, having simplicity is key and it's very helpful in trading, but you also need to understand why it works, how it works, and then be confident in why and how it works. But yeah, that's what I'm going to be doing for the remainder of the day. Check in with you later. Just kind of being as simplistic as I possibly can with this. Why would I be looking for a continuation of bearish PA for now? One, this candle closed bearish with a large wick to the top sides. In theory, in essence, we should see a continuation of that. So one determining factor, and we'll see probably in the coming weeks, is how do we react to this low if we get there? If we reject it, kind of building these type of wicks, because as we can see, if I just take a step back and we look at these lows, how did we interact with them? We've seen some sensitivity. We tried to do it once more. Sensitivity, bullish candle, and then we started to see momentum. Not an end-all be-all, though, of course. You could say, okay, well, this same thing happened. What did we do? We reversed. Because what we're understanding is we're on the monthly chart, so these are sensitive PA timeframes. And by sensitive, I mean it just takes a lot of time to get to them. If we just start looking at all of these kind of wicks, what happens when we wick a high, for example? We reverse, then we start looking at other lows. Okay, we broke that one. That was really good. But then we interacted with these lows here. What did we do? We wicked them. We continued up, wicking a high. This one's still intact. And this is still intact. So obviously, April has just started. So if we're going to be bullish, for example, we might see price push down for the first little bit, create that bottom wick, and then start to move to the upsides. Or what we could see is the starting of this bearish push. We could start coming back up to get a top wick and then continue moving down. Or we could just continue to drop. We've already created a little bit of a top wick. Basically, you'll ask yourself, well, what's a fractal? Why do you use it? All that sort of stuff. So if we look at a candle swing pattern, where we have candle here, candle here, candle here, this high would be higher than this high and higher than this high, or this low here would be lower than this low, lower than this low. So we would deem that a swing candle formation, a swing candle formation low, swing candle formation high. The only difference when you're looking at fractals is you just add two more candles. So we have the lowest low. This low is higher than this low, and this low is higher than this low. This low higher than this low, this low higher than this low. So what it does, or the power or the benefit of it, is essentially it just starts to filter out some of the noise that you might get with candle swing formations. Because if you look at something like this, we would have put this as a candle swing formation, but what we can see is this high
is higher than this high. Therefore, it's not a fractal, it's just a candle swing. So if we're looking at, market structure, for example, we can see one big push and we would kind of just ignore this. Yes, we can see that we do interact with it, get a little bit of a sweep. What do we do? Come back into demand, do all that sort of good stuff there. But that's effectively how and why I use fractals. Fractals was an indicator or a tool created by Bill Williams. Super powerful. As you can see, if we just look at the way market structure is printing and you're just looking at fractals, you can see that it gives you a pretty good visual representation of the way structure is currently moving. Obviously, there'll be some areas where you may disagree, where you just get wick breaks and you get little substructure, what almost looks like substructure. If you're following traditional market structure, you'd probably be more apt to say, okay, there's the high, there's the break. So once we break this low, we've seen a change of character, and then we're just caught in between this range. Obviously, with fractals, we have a little bit more moving PA within it. But as we can see, these are essentially, what we could take it back to even more simpler. Why are these important? Why can you use them? Because this is a common indicator. A high, this high is lower than this high. This high is lower than this high. This high is lower than this high, and this high is lower than this high. We get a fractal. Basically, you need 5 candles to create a fractal. So it's very mechanical, methodical in how it's printed. A lot of people use them, and they're good points of liquidity, really. You have a fractal here. What ends up happening, we trade higher to the fractal, trade into supply, for example, and then we continue downwards. What do we do? If I can draw straight lines, trade below this fractal, and then we continue moving back to the upside and where we currently are. So let's go down to the daily charts and just take a look at where we're at. So what I like to do, or what I've been doing, is just trying to get a really strong understanding of the weekly movements. It's been pretty helpful in terms of just understanding things. So if I just look at this is last week's weekly range, and then we'll do the week before as well. Basically, I'm just taking, in this case, a GAN box with just a background and marking out where's Friday, where's Monday, where's the range, where's the highest high of that week, where's the lowest low. And what we'll see if I just do this, I think this will work. If it doesn't, it'll just look really silly for a second, but that's okay. That's the joys of life. You get to look silly. Yeah, it's not even going to show it. You can see the outline, obviously. But as you can see, if I highlight over this, there's my first GAN box. There's the second one. Perfectly encapsulates the weekly candle as you would expect. But why would that be important? Why would you want to do that? Well, effectively, if I just do one more week's worth, this gives you a good understanding of the way the week moved. And also what we can look at is say, okay, where did the high of the week come in when we were going bearish? Oh, and on Wednesday, the low of the week was on Friday. We look here, this was Thursday, Friday, Tuesday, Friday. If you're just looking at your week in kind of this light, if we have something like this, we can say, okay, well, this is so far a weekly range that's, printing. And if we just look at each candle kind of specifically as prices going on throughout the week, we had a bullish candle here, failed to break and close below the lows of this previous candle. We would expect that price should start to continue bullish, given that we rejected the lows. But then what we can say is, well, this is Friday, and historically we know with Fridays, most of the time, price doesn't tend to just continue as much, if we get a reversal day, for example. So as we can see, Monday, bearish candle. Once we start to break, what we're expecting is that the bearish candle will continue. What ends up happening, we wick this low, and then, we close with a small body, but we have this large wick. So what are we expecting? We're probably expecting this high to go. What ends up happening, we get this bullish candle. So what are we expecting once this bullish candle closes with quite a bit of momentum here? We've taken above this high, for example. We're expecting the bullish momentum or the bullish candle to continue on the weekly chart, and then we're expecting, okay, if that's the case, our low of the week could be right here on a Tuesday, which is very common. And then we're just going to continue. What we could see is a little bit of a pullback, but having the high of the week, for example, on the Thursday. But we ended up not having that. What did we do? We rejected the highs, came down with a lot of momentum, engulfed this bullish candle. So what do we do for the Friday? Well, we expect that that's probably going to continue. What do? We close bearish. And then we go into the next week, for example, go here, what do? We rejected the low. This is Monday, so similar to Friday, sometimes we don't get immediate continuation of price, especially if we're building a candle. we want to build this first and see that continue. So as we can see, price comes up. What do? We reject the high, start going bearish, do this. This is where it gets a little fun, because now we can say, well, we rejected the low, created a doji. So you would expect potentially this high to run. What ends up happening, we just continue, reject the low, bullish candle. So as we started Monday, we could have assumed that, oh yeah, we'll probably get a bullish candle. And this is something where it might not always be 100%, but we can use this, especially when price is in momentum. But yeah, so that's kind of how I'm using the weekly range and the daily candles to kind of look at things in a little bit more simplistic fact. But then you say, oh, well, you haven't drawn a single box or anything like that. And, with all of this, I'm really ingrained in this. And now if we take a step back and ask ourselves, well, what is he doing then? This is fundamentally different. It's not really, because what are we starting to see? We're starting to see lows break, supply holding, lows breaking. We could argue that maybe this is supply, lows breaking, and price continuing. And if we look, what do? We took out this bit of structure, or this catalyst for pullback, this internal range liquidity, because we could be looking at this as demand. This is the extreme demand, for example. So if we're looking at it in that light, and we are looking at this as demand, if we're looking at this, this is your dollar on the daily chart. We zoom out a little bit, we can see that kind of just, for the most part, we did break and close below this, and then immediately have rallied, and we started to take out. Oh, look at that, we've taken out fractals. We respected this fractal, so we could see this was the inflection point, bring price further down. Or we could just, kind of cut some of that out and say, okay, well, this was the front leg we were trading within, bearish. The weekly's kind of shown that too. If we just go up to the weekly chart, for example, we've just had weekly bearish momentum. If we're just looking and seeing how price is moving, every time we close bearish, what are we doing? Breaking a low and continuing, breaking a low, continuing, breaking a low, continuing. So if we're even just looking on the weekly chart, we can see, well, we had a sweep here. This could be demand, but then if we start to look at it from more of a weekly perspective, what are we really doing? We're kind of just stuck in this little range, basically. This is supply. So, could we come to the extreme?
Well, we have Tuesday wrapped up. Fairly productive day. Today was really focused on doing some testing on the charts and actually rebooting up this YouTube channel. That's, obviously it seems kind of obvious if you're watching this video, and this particular scene is within one of the videos. Obviously I knew I'd be booting up the channel. I actually thought I was going to be creating a new YouTube channel or using a slightly different one, but decided to post on my original YouTube channel because it made the most sense. So here's hoping that I can think of content to be posting on a weekly, bi-weekly, monthly kind of basis, or whatever the cadence ends up being, and or however I deem to be posting content. I'm not really a content creator per se. I am when it comes to trading, but I'd like to venture out of that and be a little bit more broad, maybe share some of my life. As uncomfortable as that sounds, just saying it out loud. I'm also a very boring person. My life pretty much surrounds what you see behind me: trading, computer, tech, all that sort of stuff. Love to game. But yeah, we'll see what we get up to. We'll see what kind of fun stuff that we post. Hopefully it's good content. But one thing I know for certain is over time, content is only just going to get better. I'll be able to invest into new tech pieces to improve the content, because as of right now, I have a good camera to post. I have a great computer setup, things like that, but maybe the audio quality is not great, maybe the lighting's not ideal. I'll learn that along the way. It'll improve as time goes on, but obviously it's one of those things where you got to start, and your first video, your first vlog, your first podcast is going to be shit. That's just what it is. You got to get over that hump, and if you strive for perfection, you'll never actually get there. If you're always waiting to release that perfect video, to release that perfect podcast, that perfect piece of content, that perfect picture, that perfect whatever, what you'll end up doing is you won't post it because it'll never be perfect. But instead, and what I've learned and maybe come to realize in the last several months as I kind of, in my mind, planned out this rebirth, so to speak, of the YouTube channel, is that if you are waiting for that perfect moment or that perfect piece of content to bring your content to fruition, chances are you're never actually going to post it. You're never actually going to do what you say you're going to do. Why? Because perfect in many respects doesn't exist, and we constantly are iterating everything that we're doing. So, that first iteration is probably going to suck. It's going to be uncomfortable. There's so many things you could have done better. There's so many things you could have said better. You could have been less awkward on the camera. I feel super awkward on the camera speaking, being right on camera, not something I'm comfortable with. So, it's not going to be great. I'm going to pause. I'm going to forget what I'm going to say, or even, I've gone into this with no plan to say anything. But, you just going off the cuff, saying stuff. First one's going to suck. First 10 are probably going to suck. First 20, 30, 40, I don't even know how many I end up doing. But it's one of those things where the best thing to get better, or the only way to get better, is to get started and to just keep posting and keep trying. You can apply that to anything in life, whether it's making YouTube content, whether it's trading, whether it's playing video games, whether it's doing something professionally, in your job or a business you're thinking about starting. You only get better by doing, and you only get comfortable by doing. Therefore, experience and time are really the only things that we have on our side in terms of framing our thinking. If we understand that experience and time are two key things that actually help us, and knowing that, yeah, we might look a little silly as we start, we're going to make mistakes, but as long as we learn from those mistakes and we're getting better and there's a trajectory to that, don't hold crazy expectations. Your first video is not going to go viral. I don't even know how many people are going to watch this video specifically, or any of the subsequent videos, but you know what? You got to get started. They say overnight success takes absolute years of grinding, of going through pain, things like that. I can definitely experience that and attest to that for trading. And every day I'm paying my dues. Consistency is not a end goal. It's a daily battle in terms of trading, in terms of life, going to the gym, things like that, being consistent in the gym. You actually have to show up. You have to go. Your first workout, probably going to suck. You're going to feel like you don't know anything. And granted, you probably don't. And you're going to feel like you can't do anything, and you're going to feel like you're weak and you can't do all these things. But over time, it's going to get better. And that's kind of where I'm at with this project. Just kind of being a little bit more out there, aptly named Phantom, being behind the scenes, behind the screens, doing that sort of stuff. But, a fun project to, one, just take me out of my shell, become maybe a little bit more out there, maybe inspire some people along the way, give you some laughs, because occasionally I can be funny, I think. But yeah, we'll just kind of conclude today here. I don't really have much else. I'm going to be picking up my daughter from school probably in the next 20 minutes or so. So after that, I'm going to be spending the evening with them and just kind of ramp down for the evening. I'm a firm believer in spending time with family, making priority of actual priorities. I don't really follow the hustle culture where you need to be on, hours and hours and hours a day. Yeah, when you're learning new things, trading, for example, yeah, you got to put in your time. You got to be behind the charts, but it shouldn't be at the detriment of your, personal life, your family, your health, things like that. You need to find that happy balance, because if you put too much time into something, sometimes, it's not beneficial. Sometimes it actually works against you, because, you're putting in all these hours, you're detrimenting your health, you're kind of starting to resent the thing that you're working so hard at. And eventually you hit small bouts of kind of resistance in learning. You kind of hit a wall of, do I actually know what I'm doing? These sort of things. And before you know it, you just give up. Why? Not because you're a quitter, but because you resent the thing you're doing, because you spent so much time in it. Whereas if you take it a little bit slower and you kind of integrate it within your life in a healthy and sustainable way, then you're actually able to see growth and potential. Don't know how I got on that exact tangent. I feel like as we continue this journey together, there's going to be a lot of tangents, a lot of funny things where I'll say something and then I'll totally spin off, and it might even be unrelated, might be good, might not be good, but yeah, that's Tuesday. Oh hey, it's Wednesday. Just got home from taking my kids to school. It's my son's 3rd birthday today. We're going to be doing some celebrating later tonight, going out for dinner with an actual birthday party this weekend. But what's on the docket for today? Today's just going to be monitoring the charts, doing some more back testing, just doing the same things I do every single day, which is basically sitting here doing normal things. It doesn't get much more exciting than that, but at the end of the day, when you get into the life of a trader, it's not about exciting, markets or anything like that. Yes, of course you want to see volatility in the markets, but you shouldn't get excited when these things happen. It's all about following your plan, following your edge, trading what you see, and really just following your plan day in and day out. Often what that's going to mean is you're probably not going to take a lot of trades if you're following your plan and trading on plan, because in many respects, the highest probability trades, they don't come around much, because when it comes down to trading, it's really a combination of time and experience on the charts. You need to put in the time to learn the strategy or the edge that you're trading, and you need to gain experience with it. And the best way to do that, and it's something we talk about a lot in phantom trading, and it's something that I've been using throughout basically my entire career in trading, and that's what I've called the phantom roadmap. And so essentially what the roadmap is, and what I've been using for my entire trading career basically, is kind of pivoting on time and experience, breeding to confidence. And basically what you do is, when you're first learning a strategy, or maybe you know your strategy, have you ever experienced hesitation, fear of missing out, fear of taking a trade, chasing the market because you knew the market was going to go that way, but you didn't take the trade for one reason or another? A lot of the time, this comes down to one key component, and that's confidence. If you don't have the confidence to execute, you're probably not going to execute. So how can we build upon that? How can we actually develop confidence in our trading? Well, this is where it comes down to time and experience. You need to put time on the charts, and you need to have the experience showing and proving to yourself, your subconscious mind, that your strategy does in fact work. You can take a strategy from anyone. Doesn't matter what way you trade, whether it's support and resistance, supply and demand, Fibonacci, doesn't matter. You can take a strategy from someone that is successful in trading, but if you don't take the time to learn that strategy and apply it to the markets, you'll probably never be successful. Yeah, you might win some trades here and there, but ultimately you're always going to run into those same challenges of fear of missing out, doubting yourself, chasing the markets, things like that. And it comes down to, you lack confidence. Why do you lack confidence? Because you don't have that time experience. So basically what you should be doing with your trading is, when you're taking trades, you should be logging these trades, really studying your wins and your losses, and really collecting data. Because at the end of the day, your data becomes one of the most important things that you can possibly have in trading, because it's a gold mine and it's curated and fed by you. But effectively what you want to do is, no matter how you're collecting data, whether it's by journaling, whether it's by case studies, whether it's by end of day markups, whether it's by forward testing, doesn't really matter. As you're doing all of these things, you should be logging data in some sort of journaling type tool. It could be pen and paper if you really want to use that. It can be Excel, Google Sheets, it can be Notion, Evernote. There's tons of options, and really there is no one size fits all. There's no one is better than the other. I personally like Excel or Google Sheets. Effectively, once you have your journaling tool, you want to set it up in a way that you're logging things like the time you're taking a trade, whether you're buying or selling, what pair, if you're trading multiple pairs, entry prices, things like that, and then start going through your confluences. Why are you trading that particular direction, for example? What's the higher time frame direction if you're trading a multi-time frame based system? What direction is the higher time frame showing? Should you be trading in that direction? If it's counter trend, why are you trading counter trend? What are the confluences that are setting up for a particular entry that you're taking? And finally, what are the criteria, the confluences for actually taking that entry? And trading view screenshots, as many as that you would like to have, or whatever charting platform that you use. Log all of that information, and once you start to have 20, 30, 40, 50 trade examples, what you can start doing is comparing all of your winning trades amongst each other, figuring out what are the key things that are apparent on all of these winning trades: times of day, entry criteria, higher time frame confluence, all of these things. Just look at all of your trades that have a winning result first and foremost, and figure out what are the key things that tend to happen or tend to fall into place that are resulting in these winning trades. Once you kind of have that list, Then you have a list of things that you should probably focus on because they tend to contribute to your winning trades. Now what you want to do, and this one's maybe a little bit more difficult, especially when you're doing case studies and end of day markups, you're probably not going to have a lot of losing trades, but you definitely want to log them. You need to make trading as realistic as you possibly can, because if you don't, you're just skewing your data and you're not really building that proper experience. So that can be the hardest part about this data logging process, is actually recording losses, especially if you're doing it from a more hindsight-based approach, especially if you're early on in your trading plan creation, if you want to call it that, or your trading journey. Obviously, if you're trading live, you're probably going to have more losses, and then you can start to attribute those losses to technical reasons or maybe even emotional reasons, and then we can tie those emotional reasons into, well, I wasn't confident, and the more I do, the better I feel, and the more confident that I become in executing my strategy. But once you kind of have your losing trades, again, this is going to be a more difficult one. Winning trades, we all like to talk about winning trades. We all like to share winning trades. We all like to study winning trades because, hey, they won. They're going to make us money regardless if I took that trade or not. In the future, if I can replicate that, it's going to make me percentage. It's going to make me R. It's going to make me money. And that's what I need to do. But on the other side of that coin, you also need to know what are the things that you can avoid. What are the scenarios in the market, different times of day, different days of the week, even months, for example, different confluences or lack thereof confluences that are present when a losing trade tends to happen. And similarly to the winning trades, compare all of your losing trades amongst each other. Figure out the commonalities that exist in the losing trades. And then basically you have a list now that is going to say, these are the things I should probably avoid, or times of days, or lack of confluence, things like that. Then what you want to do is kind of compare that list for your winning trades to your losing trades and figure out, because obviously there's going to be some similarity amongst both of them, where at the end of the day, an edge is an edge, and really it's a game of probabilities. Your trading strategy is not going to win 100% of the time. Some people, it doesn't even win 40% of the time, 50% of the time. It really depends on the edge, the trader, all those sort of things. And you as a trader have to determine what is an acceptable strike rate or win rate that I'm looking for in my strategy. And then you need to also array on, what is the risk to reward per trade that I'm kind of looking at? Because if you're trading a model or a system that's a one-to-one risk to reward, so say you're risking 1% to make 1%, that's great, but you have to make sure you have a high strike rate or a high winning rate in order to actually consistently make money. Because every time you make or win a trade, you make 1%, but every time you lose a trade, you lose 1%. So you're kind of just doing this if you have a very low strike rate. Whereas if you have, say, a 3-to-1 risk to reward ratio, so you're risking 1% to make 3%, you can lose more trades than win and still be profitable. And then obviously if you start increasing that to 5 and so on and so forth, you can win less trades statistically, but still be profitable. So you need to figure out, what amount actually makes sense for you, because it sounds great to be looking for 1 to 10 risk to reward ratios, but when you're only winning 2 out of 10 trades, for example, sure, you might still be profitable at the end of that, but can your psychology actually handle that? Most people, they can't, because after they take a series of losses, it's not going to bode well for them. So you have to really figure out what kind of trader you are, or what kind of person you are emotionally, psychologically, so to speak, in terms of risk tolerance. How many times can you be wrong and still be bulletproof in your mindset in terms of executing your strategy? And this is where confidence comes in, and then you can adjust that. But the roadmap is such an important thing to developing that trading plan, because once you have your list of wins and losses, the criteria that kind of contribute to that, you want to focus on what brings you the wins and kind of reduce the things that contribute to your losses. And naturally, over time, you'll start to gravitate more towards the winning trades. And the cool thing about this process is the more trades you take, the more markups you do, the more case studies that you have, the more data you get, which means the more you can prove out these sort of criteria. And once you have that list of winning and losing trades criteria, and you kind of are refining your trading plan or even building a trading plan for the first time, you can then test all of that once again over a different set of data or the same set of data you've already done, and prove out whether these refinements in terms of looking at only these things makes more sense than the things you're avoiding. And if by that process your expectancy of the strategy is where you want it to be, you're winning more trades or at least making more percentage, and you can handle the drawdowns and things like that, then you have what you need. And then all you do from there is just continue logging your trades, continue journaling, continue building the data and proving that out further and further. And what this is going to do for you and why this is so important is all of this work that you're putting in is individual for you. You're the one that's looking at the charts. You're the one that's taking these trades, whether it's in hindsight or live. You're still physically and mentally doing the work, and you're logging all of this data. You're thinking about why these setups are valid, and then, you know, dissecting why, if it was a winning trade, why it was good, or why it didn't follow the plan, or why if it was a losing trade, it was still a good trade, but it just lost, things like that. You have to think critically about it. But at the end of the day, you're the one that's putting the time and effort into these charts. So if you have a data set of 100, 200 trades, for example, after, you know, several months of doing this process, it's going to instill confidence in you because you're the one who's physically put in the effort. You know what your strategy is producing because you've actually been physically putting in the effort to do so. And then you're using that data to make decisions and improve things and build upon things. And over time, that's just going to keep contributing to your confidence because you've actually put so much time into your trading strategy. And the more experience that you have behind the charts, the more time that you're putting in reaffirms and ingrains your actual edge into your subconscious. You know, if you've done all this work and built all this experience to get you to where you are in trading, you're not going to just abandon your strategy when things go wrong. You'll understand your edge so much more, and you'll be able to go through those periods of drawdown. But not only that, you'll have all the data to understand whether or not the trades that you're taking are fitting a trading plan, and you'll be able to keep constantly iterating and improving things as you go. Again, the reason why most people want to quit or jump from strategy to strategy or feel like they can't make any progress in trading is because they lack confidence in what they're actually doing. And of course, how could you be confident in something you don't have experience in? It's like anything. When you were starting to learn to ride a bike when you were a child, you probably were very nervous and you weren't very good at it. I know me, when I was a kid learning how to ride a bike, I fell off it many times before I learned how to balance and pedal and do all those sort of things. But never once did I say to myself, well, I see other people doing it, but I can't do it, so I'm just not going to do it. No, we went through the process, you know, and that's one thing that we had at our disposal when we were children. We never just thought, well, if I can't do this immediately, maybe it's not for me. You know, we got up, we tried again. Same thing when we learned to walk, riding bikes, things like that. It's also like playing sports. Initially, you're not going to be very good at it, but the more practices you go to, whether you're playing soccer, football, hockey, basketball, all these sorts of things, you know, the more you do, the better you're going to get. And the better you get, the more confident you're going to be. So what is the key determining factor of all of that? It's the fact that you're putting time and experience to build that confidence. You start from zero and you slowly start to trickle up. But the only reason you're trickling up is because you're contributing time and you're building experience to that. And naturally, over time, you're going to be confident. Another example is in the working world, when you start a new job, you're probably not overly confident about your roles and duties that you have to do because you maybe don't understand the policies and procedures, the workflow of things, the systems that you're using. You don't know the people that you work with yet, but over time, you start to become more confident in what you bring to the table and the job that you're doing. Why? Because you have time and experience with those policies and procedures, those workflows, those systems, the people that you work with. You start to get to know them, and by virtue, you become more confident. And again, time and experience is what yields that. Trading is no different, and that's why being able to understand how can I build time and experience and actually do something that I can gauge and build an actual metric on is so important. So I think for every single one of you, I would recommend trying this process if you haven't already. Log your trades. Start to compare your trades, compare your wins, compare your losses, figure out what's going to contribute to more winning trades and filter out what's contributing to losing trades, and continue to log data and really get comfortable and excited with logging data, because data is gold, and especially in the trading game, that's really the only thing that we can use to sharpen the blade and continue to improve our trading process. Oh, hey, it's Thursday. It's just after lunch. Had a very busy morning. Haven't really been able to be on the charts too much. I was on the charts this morning. Did my outlook for euro dollar and pound dollar for the Phantom community. Outlined basically how the week is progressing. What's the weekly candle look like now that we're here on Thursday? What are the previous daily candles that have made, where we are on the weekly candle, and what are we expecting for New York session, and ultimately the end of the week. Ultimately, the outlook was to just go over PA for today. I had a busy morning, took my daughter to school, took my son for a haircut, and pretty much just got behind the charts, kind of caught up on PA, talked to the community, talked to the Phantom trading team, and just kind of got caught up, ready to go for next week. So far my week has seemed, I'm not going to say that. I was going to say it's going to be interesting, but my life overall isn't overly interesting. I sit behind my screens, all day, look at charts, study charts, answer questions, assist people in, refining their trading, that sort of stuff. It doesn't really get much more exciting than that. I might occasionally play the odd video game or two in the afternoon, but more often than not, my nose is glued to the screen and I'm looking at charts. But yeah, that's it for me on Thursday. Gonna head to the gym shortly, get a workout in, and yeah, we'll see you tomorrow. Oh hey, it's Friday. Just got back from taking the kids to school and just kind of sitting down, looking at the charts, identifying the carnage that is NFP. As most people know, or maybe don't know, I don't trade NFP. I'm all about just getting small little base hits, so to speak, and just letting that compound throughout the month. So trying to get those massive trades on news has never been something that I have been, kind of looking for. No, it's not going to do anything. I'm just messing with the light. So yeah, overall, not really too much in the markets for me. This morning, was eyeing some longs at kind of pre-New York Open, but with NFP coming out, decided I probably don't want to get involved in that too much, so I'd rather just stay on the sidelines. Did another outlook for the Phantom community, breaking down EU and GU. Basically just talking about how the weekly candle and all the daily candles have created that weekly candle and what that means for the following week, and kind of leaving with the caveat that NFP is kind of going to throw things off potentially, and that's totally okay. It's our job as traders to react to the new data that is coming in on the charts. Just take that new information. Each candle is a new form of data, and just kind of react and decide whether or not we want to take a trade. And if we do want to take a trade, then great, and if not, also great. So that's kind of where today's at. Later this afternoon, gonna go and get a haircut, and just kind of get things organized for my son's birthday party tomorrow, and then just kind of have an overall chill weekend, and then kind of hit the charts and the markets hard next week, and I'll take you along the way. But wanted to kind of just thank you for sticking with me through these videos. I don't know what to expect out of it, to be honest. I'm just in recording mode right now. Once I stitch it all together and see if it's even worth putting together between the chart work and just kind of me talking to the camera a little bit. I have dealt with quality issues with my camera. I have dealt with lighting issues. I have dealt with my camera overheating constantly, which is very strange. It shouldn't overheat. It's a pretty solid DSLR camera. Maybe it's because I'm shooting in fairly high quality, but either way, I have persisted through all of it. Felt pretty uncomfortable doing this, but it's been fun, just trying to figure out what to talk about and what to share about my day-to-day life, so to speak. I'll just keep getting better as I continue this journey and this process, with you. So thanks for tuning in. Thanks for sticking with me, and we'll see you in the next one. Cheers.